Good everyone, welcome to today's edition on New Tax and Development, the Inevitables. We are grateful that you are also here again today to join us in this edition as always, and it's our pleasure having you with us. Today we are going to be talking about types of taxes, whether paid by individuals or companies. The first, which is very common, is the income taxes. Income taxes are broken down based on the components either paid by individuals or companies. Personal income taxes or pay as you earn, any of those categories are paid by individuals. The difference is that personal income taxes, those individuals go file in their tax obligations by themselves based on what their income is, and also for businesses who are registered as sole proprietorship, they pay personal income taxes, while the pay as you earn is taxes paid by individuals. The only difference is that in this case, the companies who they work for make those filings on behalf of the individuals that are working for these organizations. As at now, before, of course, we know that there is a new law coming on board very soon, as soon as the president signs off. But as at now, we have a range between 7% being the lowest for individuals earning 300,000 naira and above, to 24% being the highest band for people who earn 3 million naira per year. That will all change very soon. We'll be able to also give updates when the new changes come on board. The second tax are the capital gains taxes. This is a tax paid on any assets that you sell. Say you bought a car and you later, after using it, you sell it. The profits that you make out of that sales, you owe a 10% tax of it. There are so many computations to it, issues around depreciation and all whatnot that comes with that. Maybe that can take another edition to break it down to help people understand how the derivations are made within that space. But what it says in its generality sense is that any sales made, whether on land, cars, anything that is a capital sale, that the profits made out of it, that you owe a 10% tax of it to government. And we have the stamp duties. Stamp duties are taxes paid. Well, they are when you buy the stamp, that's already the tax that you pay. So it depends on the amount that is eligible for the particular transaction that is made. It's used to validate documents or transactions, especially legal documents, to make them binding. That is also a form of tax that is collected on legal transactions, whether by individual or corporate entities. The next will be the value added taxes. This is also tax paid by both individuals and companies in a sense, and I will explain. So the individuals, for any good that is vatable, you pay a VAT of 7.5%. If you buy your things by the roadside or open market, chances are that you are not going to pay VAT. But when you buy your things in corporate malls and all the places who are eligible from any business that is above 25 million naira turnover, as at now, that will change when the new law comes on board. But as at now, any business that has over 25 million naira turnover, if you buy any good from them, you are subjected to a value added tax of 7.5%. Of course, most times people don't know that because it's not always indicated. Some places you see it in your receipt, some places you see those goods displayed and they will tell you that the price is exclusive of tax. Then for companies who are eligible to collect mandated by government to collect all the value-added taxes paid by individuals who consume their goods and services and remit to the government at the end of the month. This is an obligation, but most times, most of these companies do not remit these taxes as collected. Then we have the withholding taxes. This is also a type of tax. Some school of thoughts don't call it taxes. It's a withholding, like you call it, withholding a percentage of the tax that that company or individual would have paid, especially on services. So if a company gives you a contract or a consultancy service, they are obligated to withhold 10% as withholding tax. And at the end of the day, when you as an individual do your filings, the tax authorities will net off what your tax obligations are with the taxes that have been withheld earlier on. Some states have enacted its consumption tax, which we also argue that there is no difference between that and the value added taxes because they are all on consumption. But as it stands now, some states have it, like Lagos State have consumption taxes. So anytime you go to either an eatery or a hotel, you are liable to paying consumption taxes, and that varies with the laws that operates in such places. And the last is education tax. This is paid by eligible companies who, when I say eligible, it's any company that pays companies income tax is eligible to pay the education tax. So if you are not within the bracket of paying company income tax, you are exempted from this. And it is 2% of the profit of that company. It's used to support the education sector of the whole federation, the education trust fund. The education tax is what is used to fund that initiative. Thank you for joining us today. We are grateful you were here. As usual, you can send in your comments, you can send in your reactions in what manner that is very convenient to you. If you want to type, you can type it. You can send a voice note. Any way that is convenient, we'll be happy to receive that from you. Until we'll meet in the next edition, stay tuned on this channel and God bless you.